It's possible the S&Ps have already put in their low. Today is September 9th. We've been looking for a correction, potentially a fourth wave correction ending in September. We thought of 3 dates. We were mentioning the 3rd, the 11th or 12th, and the 21st of September as potential bottoms. The first one came in on the 2nd rather than the 3rd. We also anticipated a rally that would happen until the 8th of September. And so far it's gone up past the 8th, had a little dip on the 9th, but it recovered. The market is very strong. It's holding. The dips that have happened so far may be it. The low on September 2nd may hold. It's also possible that that low completed the fourth wave. You can see this triangle formation, which is very often the nature of fourth waves. And we maybe already have started the fifth wave rally, which we expect to continue at least until the end of October, potentially later. We also expect a very large move up over the next month or two. So, one thing to note is, I wouldn't recommend buying unless there were some other dips to buy on. So far, we still have 2 dates. One of them is this week, and I do think because the PPI and the CPI are both coming in later this week, there's probably going to be a low in the next few days. And it may be early. It may come in on the 10th, all right? And then there's another potential dip on the 21st around the second eclipse of the month, on the solar eclipse. Both of them are probably going to happen. But if the market is as strong as I think, they'll both be fairly minor, recover quickly. And after the 21st of the month, after the 21st low, all systems go for a rally, okay? So you have to figure out how you want to handle it. If you want to buy with a little more risk this week, or you want to buy and wait a little bit longer, possibly get a higher price, but a safer entry, that's up to you. Before I go any further, I want to mention, we do research on a number of markets, and it looks like the bonds are going to make a big move. We possibly will have a live webinar coming up over the next days, potentially on the 22nd of September. So keep your eyes peeled for any information on that if you're interested in registering for that. Okay, so the basic story we're going to repeat. I'm going to say it quickly because I've been saying the same thing for months. The market should rally based upon the shorter term cycles agreeing with ultimately the 60-year cycle, and they both imply that after a low in September, and it may be minor, it may have already happened, we expect a strong rally, potentially up to 7,600. Probably before the end of the year, and possibly even as soon as the end of October, which seems dramatic and ridiculously bullish, but nevertheless it is possible. The market can move quickly if it's in a good mood. The other things that we wanted to let you know is that 18.6 years ago, the nodes are in the same position. So we look back the last time that the moon was in Leo and the Ketu was in Leo, which was back in 2006, 2007. There were 3 occurrences which were extremely highly correlated with the market recently. There was December of 2006, February of 2007, and then most important was September of 2007 that align highly correlated with the present market. All 3 of those market patterns indicate another dip is probably going to come within the next 2 weeks. It doesn't have to be huge. And then they all agree the market should rally strongly after that, at least until the end of October or even later. So we have another confirming pattern that's aligned with the astrology of now and the astrology of 18 years ago. We also talked about the 49-week cycle times 4 and times 6 in numerous videos, and they both have highs in October. We also talked about the fact that this year the seasonals are probably not going to work, where there's a low early in September or mid-September, and then it goes up into the late part of October, which is not usually the case, but it does happen at certain times. And the other things we've been describing are that there's this ultimate, this is a FOMO rally. This is all based upon this sentiment. Most of the professionals tell you 20 reasons why the economy is getting worse, why nothing is good, why unemployment is worse than expected, why the economy is going into a recession, and that all may be true. But what the stock market does and what the economy does isn't always the same. As a matter of fact, the stocks usually will lead So before there's any real recession, the stocks will probably be ready to come down, and they're not yet. So that's the story.